Hi, and welcome back to Stock Talk. My name is Joe Rabil with Rabil Stock Research. So on this show, I like to go through and analyze the stock picks that came through each week. And we will be doing that, and that makes up the bulk of the show. At the start of the show, I do a lesson. And this week, I'm going to talk a little bit more about exits. So I've talked about exits in broad strokes, but mostly when I'm looking at the indicators and the price action, I have been more focused on entry. So I wanted to give a few minutes on a lesson on exits and how it might improve your timing. So let's go ahead and get into the agenda. So in this lesson, I want to talk about the DI lines. Now, I always refer to it as ADX DI because they all work together. But in this instance today, I'm not as focused on the ADX line. I'm looking really at the two individual DI lines. And there are a couple of different things that we can use that will definitely improve our exits. One of the things that I would tell you that this strategy works on best is when we're working on a trending move, like we have a pretty solid trend in place. And then there's two different ways that I like to look at this, looking at the top DI and then looking at the bottom DI. And they're giving me a little bit different information each time. And then when we're done with that, we're going to go through the individual stocks that came through. So let's go ahead and get into this lesson. Okay, so I got a daily chart of Asana up, ASAN. And I have left the MACD up and I've left the ADX line in place as well. But I want to focus in on the green and red DI lines. So green represents the plus DI, and that is the strength of the buyers. The red line is the negative DI, and that represents the strength of the sellers. And so what I want to talk about here is when a stock is making a pretty strong trending move. I'm going to start at the far left and I'm going to work my way all the way through this chart. There is one point I do want to make is that this works in all time frames. I have definitely used this, and where I really learned the strength of this, I was using it on an intraday basis, trading very aggressively using micro time frames. And I was always... In those cases, I was always looking for an exit point rather than using a stop. I was trying to sell on the way up and looking for any minor signs that the strength of the trend is starting to slow down. And I found it to be a pretty useful tool from that standpoint. So let's start here. We're moving our way up to the upside. And if you notice, green DI is confirming each peak along the way. It's making new highs with price. As we look here, we make a new high here, we make another new high here, another new high here with price, and that lines up with this. Now, as we make this new high here, notice how we're making a lower peak. So when I see that, and that's going to happen as this is starting to move up, but we're looking for a legitimate sort of pivot high to form. And a lot of times what I'm going to do is use sort of a 2-bar low at that point. So and what I'm trying to say here is I'm looking to stay in this trend until I see signs that the DI is not confirming. Now, as this was moving up here, it really stopped confirming back here. And you might have gone ahead and used maybe this low down here, but you wouldn't have been stopped out. Because it really wasn't a good pivot in price. I am looking for a period where you get a legitimate pivot to develop. And so we have that develop here, but then it makes another new high. And then under this high, I'd probably just really tighten the stop because it's clear that the DI line is not confirming. And then we go through a sideways period here. And then notice how we make another run to the upside. And DI lines, the green DI is confirming here until we make this pivot and make a move to the upside. And then on this line at this peak, we're not confirming. So again, I probably use a 2-bar low at this point and really tighten the stop in this situation because I know the buyers are losing some strength and it's probably going to go through some kind of a pullback. Now, again, I'm not necessarily looking to play the trend at this point. I've either got a target up here that I know I want to exit and I want to time it looking for some kind of a tight way to tighten the stop based on that. And so I would use that top DI for that. Now, if we keep going, you can see more examples of this. We make a move to the upside, we start to move up, and then green DI fails to confirm here. So you'd have been stopped out somewhere in this area, most likely. Now, price actually didn't make a new high, so you might have waited to get confirmation for this peak here, and ADX, or the green DI, again, did not confirm at this point. And then again, you'd be looking for some kind of a reversal off that peak, but I'd be tightening the stop pretty aggressively at this point and not waiting for my stop to be taken out. If I have some stop, that I'm giving room on a trending basis. So can be a very useful tool from that standpoint. Now, it works on the downside too. Notice this decline phase, and we get strong red DI confirmation until this point where we rally up, get a legitimate pivot to develop. We come back down and make a minor new low, and look at the difference in the red DI this time. Does not confirm, so we want to tighten the stop in some way, shape, or form, and then look to be taken out on any kind of a rally back to the upside. Now, it actually makes another subsequent low, and then we drop down, we get red DI to confirm all the way down to the bottom until we make this pivot and then come back down and test. And notice how this is a pretty significant drop in red DI. And as this starts to turn up, I would be using that as a stop out point. Now, that's the top DI. If we look at the bottom DI, we can do the same thing, but it's giving us a little bit different sign. It's telling us when the trend is ending. So you can notice we made lower highs in the red DI until here. And on this point right here, as this was topping out here, we were getting a sign that the red DI is telling us that this trend to the upside, the sellers are finally getting strong enough to reverse the trend a little bit. And the same thing happened here at this point, but the difference is you're waiting for a break above. So it's a little bit of a later signal. You're waiting for a little bit of confirmation where you're breaking down below and this is breaking up above. Now, on the downside, we're doing the same thing. In this case, green DI never really confirmed because this peak never made a higher high. So we want to see, even though green DI made a higher high, price did not. And then we made lower high again, lower high again, lower high again. And then we made a higher high, but this time it was confirmed by price. So we're making lower highs in price all throughout. And then we finally make a higher high, and it's confirmed by the lower DI in this case, and that's a sign that this trend is probably shifting for now back to the upside. So I wanted to go through this quickly. I do these lessons quickly because we have to go through a lot of different stocks. I hope this makes sense, but just remember, when you're trending and you had a pretty strong trend, use the top DI and look for divergence, and when you see it, tighten the stop. You can use a 1 or 2 bar low at that point. If you're looking for a sign that the trend is really starting to show signs that maybe it's reversing, use that bottom DI to confirm that. And it'll be a sign that we're going through a contraction phase where both the lines are starting to come together. And you can see every one of those signals where red DI rallied up off the bottom, it was a sign that these lines were starting to come together. And then the same thing here when green DI finally broke out, these lines crisscrossed again. So that's the strategy we want to use with these. It's a kind of a complicated thing. If you have to go through this a couple times, it's probably worthwhile. But let's go ahead and get into the individual stocks and do some analysis. So before we get into the individual stocks, let me just say my research can be found at rabilstockresearch.com. If you're interested in trying the service through the individual package monthly, you can get a discount for the first 2 months using the coupon code StockTalk. So go ahead and take a look at that. Also, if you're a professional and interested in talking or communicating, I have changed my price structure, so go ahead and reach out. My contact information is listed at the end. But let's go ahead and get into the individual stocks and do some analysis. Okay, so I'm doing this video as of Thursday morning as the market's opening. Market's getting roughed up again, so I wanted to make sure you know I've got a mix of stocks. So there's stocks obviously being hit in this environment, but there's also some stocks that are kind of going in the opposite direction, or at least showing signs of improvement. There is a mix this week based on the requests that came through. So I want to make that clear. ASAN was actually the first request. And as we follow up to where I was in the lesson, you can see what I don't like about what's going on here is this violent move on the weekly chart. Look at these two monster bars to the downside that broke the 18-week and eventually broke the 40-week. And then when we rallied up, it couldn't get back above that 40-week. And now we're making another subsequent low, rallying up. So as long as we stay below this 18-week line, I think this stock is going to have a very difficult time. We can see the MACD is clearly in a downtrend below the zero line now. So just something that I think, if it can stabilize here, potentially, maybe it can try and turn. But I think it's going to take several weeks of that kind of a stabilization to really put a bottom in. So Capital One, I really like the looks of this pattern. We can see the move on the monthly chart up, and then we pulled back towards the 18-month line. We haven't actually reached it yet, but we've got pretty good momentum characteristics based on the ADX showing up here, because the ADX is well above 25 during this pullback phase. So I consider that to be a positive. Now, one thing we need, and when I see this kind of pattern where we've got a little bit of overrun of the MACD zero line, but not much, and we've got a little bit of red DI strength here, but not a whole lot. I like to draw a trend line in, and at a minimum, it needs to get through that trend line. If it does that, I start to take this pretty seriously. You can see based on today's action, we're going back down to test these lows. So I don't see anything imminent here. Unless you want to trade inside this range, then you'd have to go down to some smaller time frames and try and do that. There should be support somewhere around 140, but we do want to look at the smaller time frames to confirm that. So let's look at GLD, the gold ETF, and I've actually got a few requests later on that are individual gold stocks, so that's worth sticking around for. We've got this nice sideways pattern. And let's go and look at this weekly chart. Look at this low ADX pattern. Now we've had some volatility. Notice how either red or green was above until recently. Really just starting this year, we had all three lines below. So that shows that the price started to quiet down a little bit. And usually and often that can be the precursor to a nice move. So I like the looks of this setup, and I like the looks of the breakout right now. We're finally getting a little follow through. The fact that the 18-month is not quite rising yet might mean that we consolidate a little bit, but I think as long as we hold 75, this is in pretty good shape. Airbnb, definitely struggling here. I mean, I think the weekly tells the tale the best. We had the nice move off the low, but look at since that time, we've formed a range. We've got support. Let me just pull this up. The support is somewhere around 130, and we've got pretty significant resistance at 200. Now I would actually consider the resistance to be right around 170, 175. But it's really caught in a range. I just don't see a whole lot going on here. If we don't hold these lows, then expect this to come back and test the original opening price. Datadog. Let's go look at our 4 charts. So this has actually been holding up pretty well when it's all said and done. It's coming back to the 18-month line. What it looks like it's doing to me is I think what it wants to do is kind of form this kind of a pattern where it's sort of wedging in. And how this can hold this zero line on the MACD, I think will be pretty important. The other thing that I would watch here as this starts to pull back is, does red DI on the weekly chart get above 25? Right now, it has not done that. And we can zero in on that and see that this move up here on this pretty significant decline only got the red DI up to 25. And now we're starting to sell off again. So if we can break out above 25, then this pattern probably takes more time to get going. It just puts it at what it really means to me is that you don't have to be in a big rush to be a buyer. Again, unless you want to be a trader down near this support area under 125. So here's an interesting pattern in the aluminum area. that had the strong move to the upside. I mean, look at this on, let's start with the monthly, nice move to the upside, nice breakout. Look at the MACD confirming, look at the ADX, very strong, well above 25. And then we go through this consolidation phase. We get a pinch on the monthly chart. And then on a weekly, we've got this opposing trend pattern where the 18 crosses down below the 40, while the MACD is coming down to the 0 line and we have low ADX. We have no sign of real sellers at all. So this is a pretty intriguing pattern. Now, the fact is that the question we've got here, are stocks like this going to be able to survive the current market action? And what I would do is keep this stock on a very tight watch list. Have a small watch list of stocks that are holding up very well. And if we see signs of climax in the market, the general market, this is the type of pattern we want to go look for, a stock that didn't break down, showing a lot of strength. I also have Exxon here, and I do have a couple of energy stocks later. So XOM has pretty nice price action. If we look at what's going on, you see this leg to the upside. You are running into some resistance up here. And I had a target in the low 80s, and you can see the price resistance is also between 80 and 85. So this is a very good spot for this to take a breather. But look at the ADX pattern here, showing there's pretty good strength still in the overall trend. The volume pattern looks good. This pullback is showing lessening volume. So I'm of the belief that this is going to be a pause or a pullback in an ongoing trend and not necessarily be a topping pattern. So what I would do, and what I've been saying to my subscribers, is you got to be a little bit more careful about your entries in oil and energy stocks right now, because they have had a pretty big run and they've gotten a little extended. And I know oil's up pretty big this morning, so we could see a move, and it'd be interesting to see how they react if we see profit taking like what's going on with Exxon in some other of these names. But I'd like to see them fill in a little bit closer to their 18-week lines, and in some cases closer to the 18-month lines. So Goldman Sachs, strong move to the upside, ran into this big round number at 400. But we look at the strength of the ADX, MACD confirmed as well. But here's why I like to use 2 time frames. If you're using a single time frame and you're looking to be a long-term investor, you might have a fib grid up and you might be saying, oh, I'm coming back to this major moving average. It could be an 18 or a 20, and be a buyer because you're coming into maybe the 38% retracement and this moving average. But what I like to do is, instead of do that, I go down 1 time frame and I look at the strength of the decline and what's going on. And what I don't like, what I'm seeing is we have a low that was made here, and then we went up and tested and then made another new low here. So we made a lower low there, and then we rallied up, made a lower high, and now we've made another lower low. So we've made 2 lower highs, and now we're making our second lower low. I mean, this is a trend to the downside on the weekly chart. We have a downtrend in place. And now I would be drawing a trend line this way. And if this makes a new low, then I would accelerate the trend line down like this. And then I'm looking for a 1, 2, 3 change in trend in this situation. And preferably, I want to see green DI show improvement, because look at what red is doing here. This is pretty strong selling action. One of the best or some of the strongest selling we've seen in quite some time, if you go back a year or two. So anyway, something important to keep in mind. Don't necessarily buy on the way down. Wait for signs that we're seeing improvement on the smaller time frames. Another interesting pattern is this World Wrestling Federation. Look at how this is stabilized here right around the 50 area. Now it's more of a trading range. It hasn't gotten through 60, but this is one, and again, I'd have on my watch list. It doesn't really look like the stock market to me, or the major indices. It's doing something different. It got in trouble early, formed a base, now it's working sideways. It's starting to show signs of improvement on a momentum basis on the daily chart, but it kind of needs to get through this 60 level. It's certainly a name I'd have on a watch list. Campbell Soup has come down to pretty significant support at 40. You can see, actually dating back to 2013, we made a pretty good bottom at 40 as well, and then had this big move to the downside, rallied up, and now we're coming back to the area where it basically got going. So again, I think the 40 area is important. What I don't like is that we're below a declining 18-month line. We don't really have the momentum conditions in place to do anything exciting right now. I think 45 on a shorter term basis is kind of important. It tried to get through there but failed. You can see this resistance level. I think we need to do that. That's priority number one. If we do that, then you could look for a trade somewhere off the daily chart. But when I go through and look at a lot of the consumer staple stocks, this is not one that really has me all that excited. I think there's a lot better looking names in the consumer staples. I thought it was worthwhile taking a look at I decided to pick out a few of the requests that were some of the bigger names this week. And I think Microsoft wants to work its way back towards the 18-month line. Look at the last time we did that was when the market got hit back in 2020. I think it wants to make a move back towards this 265 area. And we're just going to have to see how it reacts there. These are some big red bars, some big selling, a little bit of volume associated with it. I don't see anything all that disturbing yet. Red DI on the weekly chart has started to poke up here. And we do have a little bit of a vertical move. Look at the directional move in MACD. You see how this decline is very steep to the downside? I definitely don't necessarily just want to jump in because this is hitting the zero line in this situation. So we want to see this stabilize, maybe get down a little bit closer to the 18-month line. So Google, I thought this was worth talking about as well. Look at what's taken place here. We get a trend line break taking place. We come down and then we go up and test. We make a minor new high on its earnings and then fail. I consider that the 2. In a 1, 2, 3 change in trend, I would consider that the 2 still, even though it made a minor new high. Now we're potentially coming back down through this kind of key 2500 area. If we break through that, then we have that 1, 2, 3. Now, we do have a rising 18-month underneath, so it doesn't necessarily mean that this is going to fall apart. But whenever I see the 1, 2, 3 taking place, a break of the trend line, it tells me this thing's in transition, and we probably don't need to be in a huge hurry to buy this at support. Again, keep an eye on how the MACD reacts at the MACD line, at the zero line, because that'll tell us a lot. And I think 2500 is also a key level to keep an eye on. Look at this Goldfields GFI. So I think this is one of the stronger looking patterns, and I want to give you the reasons why. We had a big move to the upside, and look at the ADX reading. We got up to about 45, and then during this long correction on the monthly, look at how it came back to the 18-month, rallied off, came back down again, and the ADX only got to about 27 or 28. It never crossed down below 25. And then if we look at what's going on the weekly chart, look at this ADX pattern crossing above 25 now after being low for several months, really almost a year. And pretty good price action associated with the breakout and volume. We get ADX going on the daily chart. So we're looking for a pullback in this. This is a pretty big base breakout. SSRM is another gold stock. Low ADX on the weekly chart. One fly in the ointment on this one. Everything's looking good. Look at this relative strength line kicking in. I just don't like the fact that the 18-month is declining. So I could see this taking a little bit more time to get going. But based on the fact that it's a low ADX pattern and it's trying to break out through 20, I think 20 is a key area. I actually wouldn't mind if it didn't break out right now and consolidate it first. But overall pattern is definitely worth watching. Look at this WTTR, Select Energy Services. We've gone sideways for quite some time now, and now we're breaking out on the earnings announcement. ADX is crossing 25 on the weekly chart after a long sideways and nice basing pattern with low ADX in a condition, and then we cross above 25, and now we're doing the exact same thing on the daily chart. Another stock to watch on any kind of a little dip back down towards 8, maybe a little under 8. Oceaneering, I think, is kind of interesting, and I just want to point this out. We can see this decline that's developed on the 18-month line. It's been declining for years. Now it's finally testing and holding this line. I'd be intrigued to watch for stocks in the energy area that are doing this. Now what I want to see is the 18-week line cup around, show improvement, and then look for a green DI to get going on the daily chart. And I think we have the makings of something that has all three timeframes kicking into gear at the same time. Okay, well, that's it for today's show. Thanks for joining me. Please feel free to reach out. My contact information is listed. Also, if you have a stock request, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.